Give me a second to switch up the stream. There we go. And I got to get the Discord woken up. All right, welcome everybody. I'm going to pick through a lot of stuff that I see on CNBC. This is something that kind of came through all of a sudden. Um, I'll kind of read some of the things right off of Jim Cramer's top 10 things to watch on Wednesday. Blah, 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 blah. Okay. Classic President Joe Biden calls Chinese President Xi Jinping a dictator. Well, duh. Who cares about that stuff? But they're talking about, Hawaii and ZTE might be eavesdropping. Dude, this is old news. Who the hell cares? Let's go on to the next thing. Let me get down here. BlackRock is looking to, run a spot Bitcoin exchange traded fund. Okay, it could see some flex there, but let's start looking at a couple other things just in general picks. And I'm gonna go with my Webull account here. Let me get this set up on a single grid. Lighten this up. We'll start with dailies, and FedEx was one that was on the list. Let's see what they say about that. Lays an egg or did it? Quarterly earnings beat but revenue missed. Da, 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 da. Who cares? Let's see what the price action says. We've looked at this before. It was called out last week, of course. It was on their radar again last week. And of course, when they speak about things, they tend to jump up. A bunch of people just pile into the trade blindly, not knowing what the hell the left side of the chart is telling them. So what we do have here is in turn a pullback on this trend here. It broke angular resistance here, and this is our mean revision target up here at about 244. We kind of know that. We usually mark those in white. And expectedly, they haven't given it any real price target or anything like that. They just kind of said, oh, they're a little bit bullish on it, but they're kind of like waiting through the muck, so to speak, until the earnings call settles out. Well, that's old news. Here's your dividend. Cool. Things are starting to move. So price action tells us this is very likely to be just another pullback in the trend. It did spike out and come back to a mean revision. So we probably have a decent setup starting to take shape here. And I'll look at this again on Friday to see where we're at. But look at this mean revision. Textbook. You got a whole trend here. Half the move gets retraced right to the 200 period on the 2-hour chart. Good to go. Look for bulls to start buying here. This is going to be a supply zone. A real quick way to find this, if you see this trend like this, see that wick? Draw a box on the wick. You just have to know that there's likely to be buyers here because that's what caused that wick is a whole pile of limit orders came through. So orders changed hands quickly, price reverses. Simple as that. All right, so that's our liquidity zone. Looking at off the floor here, key pivot area. We got some room to run at least to a 50% revision. So we could go from like 225 to about 230. Quick little $5 move. All we need to know. Trade the chart. Who cares what the talking heads say? Instant mean revision target. Now today we've already kind of hit it twice with a couple 2-hour candles. Let's break this down. 5-minute chart. We ran right over it, came back, mean revision, bounced again, came back to our support zone. Now we're making a reversal, double bottom. This is where the buyers are. So short-term targets, you got a 5-minute target here at about 226.60. And you've got some extensions coming out. 227, 228 will be on the board. We could probably close right around there and be okay with it, somewhere in that range. Is this an options entry for a swing trade yet? Hard to say, but you could certainly take and put some spreads on this and maybe start building some positions here. But I usually wait for a better signal than just seeing this little descending channel here. Let's move on to the next thing here. How about UPS? So apparently, nothing yet from UPS service, but strike could be meaningful. Strike coming up at, who the hell cares what they're saying about this? Let's look at the chart. Fundamentals, I know we used to call them funny mentals around here because it's just kind of all the same. So nice little reversal here. We got that gap down, of course. That was the earnings failure, whatever. Bunch of people bailed. Now we've kind of accumulated here. We've got a key support area that's pretty obvious right here, right across that level. This is a quick 1-for-1 measured move. That's already done. Coming back to support here, we could see this thing build a trade sooner or later. Mean revision target, if you want to just adjust that pivot area, Simple as that. There's one leg, there's two legs, mean revision's done. Watch for a bounce over the next couple of days with UPS. We might be able to get a nice long signal out of that. Price action wise, this is pretty keen on that pivot. Let's look a little further left just to kind of verify things here. That's pretty choppy on the weekly. It's been able to make and sustain some pretty decent measured moves. It's like my go-to pattern for any trade is looking for measured moves. When it comes to swing trading, those are your best friend. I'll tell you that right now. So, long story short, we've made full 1-for-1 mean revision on the 2 hour. We could start setting up today, tomorrow for a hold on the support area and probably a reversal off of this to where we can go a little higher. What happens then? You start to look at the idea of what if this is your whole trend, and if you want to see the median or the mean on the consolidation, it would look like this. Start drawing your boxes, and you can kind of decide, okay, if it holds that pivot, we know where that pivot is. That's a support area. This becomes your long-term price target. So up here around 185, 186, very reasonable. About a $10 move, definitely on the table, and all we got to do is wait for our signal. Kind of like this one. I'll keep this on the watch. This one I'll definitely add to my watch list. So I'm going to start writing these down as I go because I'm going to be building a watch list for the BB team to go in the watch list on the Discord channel right after this. UPS is definitely one. Okay, let's look at the next thing. Strike coming at club name Ford. Watch the labor talks that began in July because the new president of the United Automobile Workers, Shawn Fain, is not like the previous leaders of the union. Okay, Fain says that billionaire corporations are the real enemy. No, the lobbyists they empower are. Sorry, dude, you're wrong. They're just using that as leverage to try and bilk some more wages out of Ford so that the union dues can cut into those. It's kind of how that works. I'm sorry, I'm not a union buster kind of guy, but that's just business, man. Look at it for what it is. It's black and white. It's right there in front of you. Let's look at Ford. Kind of peaked out. Nice little rounding top here. We've been watching this for a long time. Ford is my go-to for teaching people how to trade option strategies, and man, that wedge was just glorious. Diamond out, ran right up to liquidity. We're in a key zone here. We basically more or less made this mean revision out of that. The bull target has pretty much been met. Now it's looking for consolidation in this area. As long as we can hold this angular, we've got one more shot at a quick bull move. We might get about 1450 out of it. Not a big move for options trading. This is going to be more of a wheel trade stock for me. I'm still kind of into that idea, but the yield isn't all that great. However, options trading on this thing is pretty fun to learn because it's very easy going. It's not a lot of risk, and you can really learn a lot about trading different option strategies with this one because it's got tons of options liquidity. Looking at the 2 hour, we're kind of playing right along that line. These lines I've drawn and had here for a long time. Many people have known me, seen me draw all over Ford chart. And when I see these rounding tops, I always say they look bearish until they aren't. And knowing this angular is here is key. So if this reverses off of this and starts to chew through liquidity, pretty easy target about 1428 and 1450 respectively out of that. And if this pulls back as if it's going to be a measured move, well, that's one hell of a leg right there, folks. So if we see that thing start to blow out and Ford gets really popular, we could see some things go. Definitely keep an eye on their competition in the market. Certainly keep an eye on GM as well. And I don't even mess with FCA anymore. They've changed their ticker. It's just Tesla's where it's at. But let's take a quick look at GM real quick while I'm in it. Of course, I saw this massive 1-for-1 bearish measured move. We know that the institutions have a target at like $38. Yeah, that's kind of right in the middle of the muck here. If it fails this, we know there's a bear support level target right down here at about 34 and some change. And if it snaps that, this will resume. Pretty nasty business, but that's what the setup is. It looks like one big ass bear flag and walks like a duck, talks like a duck. You know the story. So definitely keep an eye on this one. It can definitely kind of change the scope of what's going to happen in the automotive industry. This is going to be a big influential player in that mix. And of course, things are kind of interesting because a lot of GM's production and development is moved over to China, and there's some things happening in China that are kind of destabilizing it a little bit for them. So who knows what's in the mix for that? Fundamentally, I just trade the chart. uh, Next, old Jim talks about Tesla. Tesla moving into India, offering some very positive incentives for EVs. CEO Elon Musk meeting with Indian Prime Minister blah, blah. But Barclays says enough is enough. Tesla shares have run too far too fast, though the analysts say there's still significant long-term opportunity in the stock. Well, chart tells me stick with it because things are getting nice. I've mapped out this 2-for-1 measured move. I'm standing by this as the primary target, though, about 288 to 290, because that is just a clean mean revision of this bad boy here. I've talked about Tesla over and over and over again, and dude, I cleaned house on both of these moves. Very happy. Elon has paid my bills. Now I'm looking at some consolidation between these two zones, and if it gets to be a break above that 288 target, we know that continuation in that trend, as long as it breaks this liquidity, we could see some running and finish that move. I don't know if you guys have been watching my kick stream lately, but I've been kind of running some late night stuff after hours, running the same kind of analysis on Bitcoin, and I've nailed 3 for 3 just since I started streaming on Kick. I'm really good at finding these targets and knowing what happens when things consolidate and move through. It's pretty much just based on experience. When you see these setups, you just kind of know. They're like second nature to you. You just know that if this then that. So we've got one leg here, consolidation, split the mean, draw a box. That was our target here. Nailed it, cleaned house. Now we're above that pivot. We are still above 255, 260 even, and we're kind of consolidating. I would expect nothing less because that's the kind of thing to do. Yes, the share price is a little high, but you know what? It's certainly got more potential. So I'll absolutely agree with them. Yes, there is still significant long-term opportunities in the stock, and this is one of them. So I also kind of pay attention, and one thing I noticed is there's a wick there for a reason, y'all. That's a supply zone. So if we breach that pivot, certainly watch for consolidation between this supply zone and that pivot. It's going to get interesting. I draw those in orange just to kind of stick them out in front of my face. Let me know they're there. Be very mindful of that. Moving forward, let's go and look at, oh, hey, Citi analysts boost club holding Constellation Brands. It's STZ. Let's pull that chart up. This has kind of been the bull play on the political situation with Bud Light. I mean, everybody and their mother was shorting Bud Light. Da da da. Well, money moves over to somewhere else because people are always going to be drinking beer. That's just something you can't shut off in America. Sorry, it's just going to happen. So, looking at let's see, what is their price target? Their price target has been bumped to 280 per share from 265. I didn't have their previous 265 on here, but let's run the 280. Damn, son. That's a hell of a lofty goal. But let's do some more analysis and figure this out. So there's 280. And I like to paint these purple because that stands out to me as a institutional price target. We're out on the weekly chart. We're looking at one hell of a choppy top on the weekly chart. This looks just like one of those rounding tops when they start to break out. When I say they're bearish, usually I'm saying it when you see about that much of it. They look bearish as hell until they're not. They bounce off a key level and away they go. So let's look at the setup. We got a leg here, and a 2-for-1 would take it pretty close to 280. I'd say more like 270, 265 would be a little more reasonable than a 280 price target. So the previous price target was 265. Let me mark that out. Definitely seems a little more reasonable. I'm going to mark this also in purple because it's a previous price target. And just so we know where their target was before. That seems a lot more respectable. Let's draw the boxes and see where it takes us. So we'll split the mean, triple stack. Sometimes your analysis can really be this easy, guys. Didn't draw a third one for some reason. There we go. So you can kind of see plainly like consolidation, leg, consolidation, leg. Let's say that 258 is probably a little more reasonable. That would be my price target. 258.50 is a little generous in that term. Knowing that we have previous liquidity there, let's see what the daily chart tells us. Yes, okay. I would say that we would probably see a short-term supply zone right around this guy. Remember that wick's there for a reason. And if we can chew through that, we should start to see some movement. So consolidating here, my price target would be up here at about 258.50. Pretty easy analysis. Take everything I say with a grain of salt. Do your own due diligence. Analyze things the way you want to analyze them. Set up your own way to find your price targets and trade your stuff. I'm certainly not a licensed financial advisor, just to kind of make a disclaimer out there. But it's pretty easy to just draw some pictures on a chart. And if this fails, I don't have to be long. I can just drop that and move on to something else. If this consolidates and breaks out, I'm long, I'm good. Pretty simple. Have a trade plan and have an exit plan if things don't work out the way you want them to. It's okay to be wrong, and you've got to be able to accept that and take the loss and move on and do something else. Eventually, you get really good at it. You become more successful than your failings, and you learn from your failings, and you move on. You do better and better each time. I promise. So I'm going to put STZ on the watch list as well. I will certainly announce that one. Tesla is a no-brainer. I'll just do an update with that. And let's see what else is next. All right, Jefferies, Brent Thrill, a good analyst, raises price target on club holding Amazon to 150 per share from 135 based on sum of the parts. Okay. Well, let's see what Amazon looks like. I've been in Amazon for a while, guys. Love Amazon. It's one of my favorite things to trade. Here's what I have. I have a mean revision supply zone right here, right between 142 and 145-ish. Just mark the wick and draw a box. It's that simple. Mean revision of this weekly descending channel. Of course, it's broken out of this guy. I've traded the crap out of all this move. Now I'm sitting here knowing that there's a very distinctive supply zone right here at the base of our 3-for-1 measured move, not just 2, 3. This is mythical. Very rare do these form, and it's even more rare that they actually follow through. I'm pretty happy with the profits I have. I can see clearly on the weekly chart there's some wicks here, so there's some definite sellers in the market here. But if this consolidates and breaks this zone, sure, I can see a breakout. 150, that might be being a little bit generous, just saying. I'll put it on there. That's their mark. And I'll queue it up to exactly 150 if I can. If I can't do it in a couple seconds, I'll just skip over it and do it later. Hell with it. 150.11 is good enough for me. All right, so before I forget to lock it, price analysis, nice clean double bottom R1 break, long trade right on the break of the channel, gloriously parabolic from there. It's made a very nice measured move setup overall, and easy trading. I've been there, done that. Now you can kind of look at it a little bit differently since we've essentially accumulated this block, and this block. I'm going to draw this different now, and I actually have an idea that usually when these follow through, you get bigger meaning. So let's go and base this here, that there, and that there. Now it makes more sense, comes right to our mean revision target. So leg 1, leg 2, leg 3, 2 for 1. I know 3 for 1 follow throughs are rare. The 2 for 1s are pretty common. They do work most of the time. And if you've had any experience along with following me, you know I'm pretty good at finding these. Looking at this guy, that makes very much more sense to have a 135, 136 target. And of course, on the daily chart, it definitely follows through. There is a gap zone here that we're consolidating in currently, and it sits right under this supply zone. Knowing that you have some analysts out there up in the price target all the way up here, all of a sudden the options implied volatility and thus the expense of premium on those options becomes out of sight. It pushes it way beyond. Let this consolidate for a while. Today was certainly a great pullback day. We can see that this has been dipped right down to liquidity and right back up to a mean revision. Look at this, 1 leg, 2 leg. These are common all the time. 1 leg, 2 leg. Now come back for 50% retracement or mean revision as some people call it. Wick right there. Easy peasy bull trade to get long here on that pullback. But the options were still overpriced into this morning's price action. And I almost expect tomorrow to pull back to a mean somewhere around 125. I'd like to see it there before I went long and probably see some of that implied volatility fade from today's analyst upgrade. Let it play out a little bit, guys. Unless you're selling options. I love wheel trading this kind of stuff. You could certainly be an option seller and take advantage of that implied volatility hiking the price up on premium. I do that all the time. I just not doing it currently with Amazon. And certainly to say you could also mitigate a lot of that risk with some spreads in the options chain if you're going to trade options on this thing. Certainly some debit spreads in that range would be okay. Just knowing that a $5 wide in this range is probably going to be pretty expensive a month out. You're probably looking at least 30 to 50 cents out of a $5. A little bit above and beyond my risk to reward ratio, but I know many successful traders who trade in that range just fine. So it's certainly something to keep an eye on. Personally, I'm going to wait for a little bit more consolidation before I jump long on that. Definitely putting that on the watch list, though. That's something to definitely take note on. All right, moving on to the last but not least thing. AWS. I don't even know if that's publicly traded. Let me look at that. Oops. Can't type either. No. So Amazon's web service, AWS. Yeah, that's not the cloud service I'm looking for. Okay, let's move on to Disney. I haven't memorized all the tickers yet. Disney, you can see I've had some bearish trades in here, done very well with bearish measured moves, just like I do with bullish measured moves. Certainly been a great time to trade bearishly on that trend. However, there's some key support that happened here. It didn't quite make a 2 for 1, and it found a bottom right in that area. Watch for consolidation on Disney. We could see things get interesting pretty soon. But also know that this diamond pattern is pretty obvious. We're in the bear channel on that. So if we can find support here, cool. We can go back up towards the resistance levels up here and maybe crack out of this at 105, 106. But I'm not so sure it's going to be all that great from here until we see consolidation and accumulation into a reversal. Sorry, I had to mute my mic for a minute and hack along up. Okay, so looking at that, they have moved their price target around. So let's see, they got Disney to 88 per share from 107. So basically they downgraded it. Usually when you hear a bunch of institutional analysts say downgrade, watch carefully. It's usually a liquidity grab. Let's go ahead and put that mark on the chart. Let's see, $88. Kind of puts us in an area where that support is already known. Duh. Look for liquidity here. And I think if this bounces down, we could see a real quick short squeeze into a mean revision on Disney, right back to about 90.50. maybe even a little bit higher, pushing like 91.50, somewhere in that neighborhood. That would be a reasonable return target on that. Not quite on the watch list yet, not quite finished with a reversal of any kind here, but certainly watch it around this level. It's definitely going to be interesting when it gets there. Like I said, when you hear analysts downgrade, everybody and their mother is going to chase that right down to the bone. So usually it's a liquidity grab when they say stuff like that. Sorry, I'm just saying what I see. All right then. Well, that can kind of conclude our watch list. We've got 3 good ones on there: UPS, STZ, and Amazon for continuation patterns, and one with a potential decent long range target. Certainly stay tuned to the channel, and please follow me on Kick. I'm building a following there. We're going to start doing some things, marketing a lot more stuff out there with the Bullish Bears team. Thanks again for joining me. See you guys later on.